Hello everyone. So today we will continue and explain the financial statements. Today we will look at the two main financial statements, the balance sheet, statement of financial position, and statement of profit and loss. Before we start, let's do a bit revision for the last 2 weeks. So sales. What's the sales? When the products are sold, this is the income of the business. It's called sales or sales revenue. So when the business sells products or services, this is called sales income. So we have sales return or return in. So what do I mean by sales return or return in? That goods have been sold but sent back to the business. For example, if you bought something from Amazon, and you didn't like it, and then you return it back to Amazon. So this is return into Amazon, sales return to Amazon. In this case, Amazon will refund you. So in this case, what we need to do, we need to deduct it from the sales. It is sales return. We have also purchases. Purchases, stock that will be sold. When we made purchases as a business, the aim of purchases is for resale, to buy inventory, to resell it to the customers. Purchase return is the opposite of sales return, which is goods that had been purchased are returned. So what does that mean? This means as a business, for instance, if you look at Tesco, if Tesco bought banana from X supplier, okay, that's fine, that's purchases, right? So if the banana was out of date, so Tesco returned the banana to the supplier and they got their money back. So this is purchase return or return out. That's out of Tesco, out of Tesco. So as a client, as a customer, you are not involved. In terms of stock inventory, goods as a business sells, this is stock inventory. We have two transactions. We have cash sale and credit sale. What is the main difference between cash sale and credit sale? When I say cash sale, right, what do I mean by this? Very simple. You go buy something, pay cash, and just leave, or buy debit card, credit card, whatever. So this is called cash sale. When it comes to credit sale, when you buy something, or the business when they sell you something and they haven't received the money yet. So sales are made on a credit basis. Sales are made on a credit basis. So in this case, if the sales are made on a credit basis, so the business needs to open a T account. It's called trade receivables or debtor account. Trade receivables or debtor account. What does that mean? This means that you bought something. Let's say you bought an iPhone from Apple, right? Amazing, great. So Apple has a system for you to pay back later through 6 or 12 months through installments, right? So in this case, Apple will open an account for you and will write the name, your name, trade receivable debtor, and this means that you owe Apple the price or the cost of the iPhone, for instance, £1,000. So every month you pay, for instance, £100. So your trade receivables will be reduced by £100 every month. This is trade receivables. It's opposite of a trade payable. Trade payable, purchases are made on a credit. Purchases are made on credit. As a customer, you are not involved there, right? So now when Tesco bought something from X supplier, the banana, if you remember, so what happened here? Tesco hasn't paid anything to the supplier. So they said, okay, I'll pay you later. In this case, Tesco will need to open an account and call it creditor or trade payable. Trade payable. What does that mean? This means, Tesco owes the supplier. Yeah, Tesco owes the supplier. Okay, great. Now one question. If Tesco will open a T account, which is trade payable, so the supplier will open account and call it what? Call it trade receivables, because the supplier sold Tesco, so trade receivables. Tesco is a debtor to them, isn't it? In terms of expenses, daily expenses such as wages, electricity rate, etc., we have assets and liabilities. So what do I mean by assets? Remember, when we start explaining accounting, I did mention an accounting equation, and the accounting equation is assets minus liabilities equal equity or capital. So assets, what the business owns or control, anything the business owns. Think about anything the business owns. So it's divided into non-current assets, fixed assets, and also divided into the current assets. Non-current assets or fixed assets, assets to keep and use in the business for more than 1 year. For more than 1 year. This is for only the business use, yeah? So anything, think about it, like van, machine, premises, computer. If you go to Pizza Hut, you see the delivery vehicle, Domino's, Pizza. These are delivery vehicle. They are classified as fixed assets to the business, only for the business use. But if you talk about the current assets, this is for what? This is assets to keep and use in the business for what? For no more than 1 year. So within 12 months, within 1 year only. An example would be what? Cash, bank, inventory, stock, debtor, trade receivable. Trade receivable is an asset, because the business doesn't own physically the money right now, but they will own it later. So the second part is the liabilities. Liabilities, obligations on the business, yeah? So again, it divides into two parts, the current liabilities and the non-current liabilities. The current liabilities, obligation on the business within 1 year. Within 1 year. Such as a trade payable, which is a creditors. Another example of it, bank overdraft. Yeah, bank overdraft. So when you're, have you ever seen your bank balance as minus? So that's called bank overdraft. So how about the non-current liabilities? The non-current liabilities, it's obligation on the business for more than 1 year. For more than 1 year. And the main example would be the long-term loan. The long-term loan. In terms of financed by or capital, or equity, how much the business owns the owner. Yeah, how much the business owns the owner. That's mean capital, equity. Stock inventory, we did explain it. Drawings, when the owner takes money out of the business for their personal use. So if you have a business, you want to buy your car, your BMW car, or Ferrari, so what you need to do, you take the money out from the business bank, and this is classified as drawings. In terms of discount allowed and discount received, so what is the main difference between discount allowed and discount received? If you go to any place, to the market, to Amazon, you will see a lot of discounts. Even if you go to Tesco, you will see a lot of discounts, isn't it? It's classified as discount allowed. Discount allowed means the business allows you this discount, yeah? Allows you discount. Instead of buying this for £1, you will pay 80 pence. Discount allowed is an expense to the business. Is an expense to the business. Discount received, when the business gets discount from the supplier. Yeah, discount received. For example, when Tesco received discount from the supplier, that means discount received. And discount received is classified as what? As income to the business, as an income to the business, classified as other income, to the business. Now, in terms of some revision, so what do you think of this? If we look at this, find out the value of assets if liability is 5,000 and capital or equity 1,000. So what you need to do here, you need to apply the accounting equation, which is assets minus liabilities equal equity, or assets equal liabilities plus equity or capital. So if you apply the equation, of course, this is a math, so you'll find out the answer is 6,000. How about this? Which of the following is not an item of a statement of financial position? We did explain last week, if you remember briefly, and we did say that which one is not. Trade receivable, it is. Trade receivable is an asset, is a current assets. Trade payable is a current liability. Share capital or finance by, of course, it's part of the balance sheet or statement of financial position. However, the sales revenue is not part of statement of financial position. It is part of statement of profit or loss. How about this? Net income equal to revenue minus, of course, if you look here, you will see it, expenses. How about this? Net loss occurs when, what do you think? Of course, would be expenses are greater than income. In this case, we will have net loss. How about this? If Megan bought milk from Tesco, then returned it to the following day it was expired. So what do you think? Is that return in or out to Tesco? Return in to Tesco or out? So of course in, isn't it? In. This is sales return. Sales return. Okay. Now let's come to the financial statements. We will look at two main financial statements. We will start with the statement of profit or loss, and then we will move to the statement of financial position. So this is the format which you need to look at, or which actually not to look at, you need to memorize and know it by your heart. So a lot of students will ask me a question: Do you need to memorize it? Do you need to know it by heart? Yes, unfortunately, no format or templates will be provided in the exam. In this case, you should practice and know it by heart. And this is the template which you need to follow in order to prepare statement of profit or loss. So if you look here, you start with sales. You start with sales revenue, and then you need to minus cost of sales. In this case, when you come to bracket, can you see the bracket here, guys? It is minus. Bracket means minus. So revenue minus sales, revenue minus cost of sales equal gross profit. Gross profit minus distribution and admin expenses is equal profit before tax or operating profit And after that, you deduct the tax. In this case, you will have profit for the year. Profit for the year, or net profit. If you look at this template, if you look at this template and you look at this template we used to use it previously. That's a previous template, previous version, but it was changed. So if you look at, what can you see the main difference between this version and this version? So of course, if you look at this version, you can see that it's more details. So sales, you start with sales, and if there is any sales return, you deduct it in order to reach to the net sales. In terms of cost of sales, it does give you the formula here to do it, which is the formula to calculate cost of sales, which you need to know it by heart because you are going to use the lot. Opening inventory plus purchases minus closing inventory. If there is a purchase return, also you need to deduct purchase return. So in this case, you will reach to cost of sales. So sales minus cost of sales gives you the gross profit, So then you need to minus the expenses. As you see, examples of expenses available here: wages, depreciation. Depreciation, we'll look at it later. And insurance, rent. So gross profit minus expenses, it does give you operating profit. Now, what you need to do here, you need to add any other income and deduct any tax available or interest payable, right? If you look here, we have interest received, you add it up. You have discount received, you add it up to the business. Then you take away the interest payable and the tax payable. Interest payable, when the business took loan from the bank and they pay interest on it. And the tax, the tax when they pay to HMRC, tax authority. Interest received, when the business they received interest, could be anything. They could received on the money, the savings in the bank. They have money and they receive interest on it. And the discount received, I did explain discount received, when the business received discount from other suppliers, and it's classified as an income. So operating profit, add the other income minus the interest payable and the tax payable, so you will find the net profit or loss. Or loss. Doesn't have to be profit, could be loss, isn't it? Now if you tell me, right, which template we're gonna follow, of course we're gonna follow this one. So we're gonna follow this one, and the workings we will have to do separate workings, not on the statement. We are not going to do the workings on the statements. We will do the working on separate page. Do the workings and then go back to the statement and write the final figure. This is the way we will do it. Okay. Now if you look at profit and loss account here, so again, sales minus cost of sales equal gross profit. Gross profit minus expenses equal operating profit. And operating profit, you add other income. I did say like interest received and discount received, and then you minus interest payable and you minus the tax payable. You will end up with net profit. You will end up with what? With net profit. This is the trading account. This is the trading account. Look here. In order to calculate the gross profit, we agreed that you start with sales revenue, as you see, and then you need to calculate cost of sales. Why? Because sales minus cost of sales equal gross profit. So again and again and again, you need to memorize this. Cost of sales, the formula for cost of sales equal opening inventory plus purchases minus closing inventory. If you do this, you should find the cost of sales. So sales minus cost of sales, it's a gross profit. Now, this template or this trading account, we will apply in this example, right? Look at this. If Sophia buys 100 pairs of shoes for £30 each, okay? She sells 20 pairs for £50 each. So this is the selling price per unit. What is her gross profit? Right. In this case, let's apply the trading account. which is you start with the sales revenue. Sales revenue is 1,000. Would you agree? Why 1,000? Because she sells 20 pairs at 50 each, so this is 1,000, isn't it? 1,000 pounds. Now, what we need to do right now, we need to calculate the cost of sales, which is the opening inventory, 0, or opening stock. We have no opening inventory here, guys. Nothing. It's not mentioned anything in the question. You need to add the purchases, 3,000s. Why 3,000s? It's very simple, because she bought 100 pairs at 30 each, isn't it? At 30 each, this is 3,000 pounds worth of purchases of stock. Now you're closing stock. What do you think? How much you will be closing stock? Yeah, this is the tricky part. Yeah, so say something. Yeah, so the closing stock would be 2,400 pounds. So now I'm sure you ask yourself, okay, why 2,400 pounds? Because she bought 100. Yeah, she bought 100, and from 100 she sold 20. In this case, what's left? 80. What's left? 80 pairs. So 80 times 30, which is how much did she pay for it. So this is 2,400 pound worth of a closing stock. So 3,000 minus 2,400, this is the cost of sales, which is 600 pound, which is 600 pound. So 1,000 pound of sales, 1,000 pound of sales minus cost of sales, which is 600 pound, that gives us 400 pound. 400 pound, which is, again, this is a gross profit. Gross profit. Right, what do you think of this? Which one of the following elements will be used to calculate gross profit? So what do you think? Wages, expenses, tax, no, this is the bottom of statement of profit or loss. Interest received, no, the bottom there, other income. Of course, the answer is a closing stock. Why closing stock? Because in order to calculate the gross profit, what you need to do, you need to calculate cost of sales, and closing stock is one of the items under cost of sales. So the answer is A. Okay, so now let's look at this example. Let's look at this example. Did you remember, guys, when you record the business transaction? When you have business transactions, what do? You record them using T accounts, and after you record them using T accounts, you balance of the account, and after you balance of the account, you prepare trial balance. You prepare the trial balance, and this is a trial balance right now in front of you. And from the trial balance, what we are going to do, guys, we are going to prepare the statement of profit or loss, and also statement of financial position. So these items, when you prepare, you do not use them all to prepare one statement, so you can use them for both statements. Okay, so first of all, remember that every business, every company has a financial year. Has what? A financial year. And the financial year doesn't mean it will start from 1st of January and ends on 31st of December like a new year. No. So the company can start any month of the year. Okay. For instance, this company, I call it Tesco, starts the financial year, ends on 30th of September 2020. In this case, go back 1 year. So that's 1st of October 2019. 1st of October 2019. So this financial year for this specific company, Tesco, starts from 1st of October 2019 and ends to 30th of September 2020. This is one financial year. And this is what we are doing the accounts here. Okay? So if you look at this business, we have here the stock note, stock as 30th of September 2020. When I say stock at 30th of September, this is the end of the year, end of the financial year. What does that mean? This means this is a closing stock. Closing stock. Now if you look at the items, again, some items you need to use to prepare a statement of profit or loss, and some items you need to prepare statement of financial position. So you should be aware of capital. Again, capital. So you need to write beside it statement of financial position, because you use capital only, statement of financial position. Cash, statement of financial position under current assets. Under current assets. Okay, and why is under current asset? Because cash or capital here on the debit side. On the debit side. What does that mean? This means is money in. Money in. Money in. It's a debit, current assets. If I trick you and I told you cash or bank on the credit side, if I put it on the credit side, the 1,200 will be in the credit side. This means will be current liability. Current liability, because it's money out. It's money out. Creditors, trade payable is a current liability, right beside it, current liability, and current liability it's on the statement of financial position. Trade receivables, again, it's in statement of financial position under current assets. Drawings, statement of financial position under equity or capital or finance by. Furnitures and fittings, it's a fixed assets, is a non-current assets, and again it is under what? Statement of financial position. Heating and lighting, expense. So in this case you need to write beside it expense, and all expenses are written in the statement of profit or loss. Okay, so this one we are going to use it. Heating and lighting is an expense. Miscellaneous expense, from the name it's an expense, we're going to use it. Purchases, we're going to use it for statement profit or loss. Why? In order to prepare or calculate the what's called cost of sales. Cost of sales. Sales we needed in order to do the statement, so right beside the statement profit or loss. Stock inventory at 1st of October 2019. So when I say 1st of October 2019, what does that mean? This means is the beginning of the year. What does that mean? It's opening stock or inventory. So again, we need to use it in statement profit or loss to calculate cost of sales. Wages, salaries, again, expense, isn't it? Expense, and we are using it in statement profit or loss. If you look at the last one, the closing stock, which is a £12,000, this is the only item, £12,000, the only item we are using it in both statements, in statement of profit or loss and also in statement of financial position, right? So first of all, we use it when we calculate cost of sales, and the second, when we prepare a statement of financial position. In the next example, we are using it because it's part of current assets. So the first job or the first task you do, you need to prepare the workings. You need to prepare the workings. Before you start preparing the statements, remember that you need to prepare the workings. Once you've got the workings done, here we go, easy job. Here we go. Let's go to the workings. We have two workings here. If you see, we have working one, which is the cost of sales, and also we have working two, which is the expenses. Okay, so now let's have a look at the working one. If you look, what is the cost of sales? Cost of sales, opening inventory plus purchases minus closing inventory. Yeah. So what is the opening inventory? If you go back to the question, you can see that the opening inventory is 7,000 plus purchase is 52,000. So in the question, go back, you will see it, and minus the closing inventory, which is the 12,000, which is 12,000 pounds. So if you add these and you minus these, this is a cost of sales. This is cost of sales, which is 47,000 pounds, which is 47,000 pound cost of sales. So once you've got cost of sales, it's ready. Here we go. Working one, ready. Let's move to working two. Working two, you need to calculate the expenses. And if you see the question, we've got 3 expenses available. We've got 3 expenses available, which are heat and light, wages, and miscellaneous. You list them under trial balance, as you see, because these numbers come from a trial balance, and you add them up, and this is 26,000 pounds. 26,000 pounds. So you'll ask me, how about the other column? Just leave it. So we'll explain it next time. So total, add them up, total expenses, 26,000 pounds. 26,000 pounds. So now once you've got the 2 workings ready, here we go, just go back and try to prepare the statement right now. Okay, you start with the name of the business, because you've got marks on the name of the business and the date. This is exactly what you need to type in order to get this mark. And remember that you start with the sales, and the sales is 79,000. Again, this figure comes from the question. Go back to the question, you will see it. A lot of students, they will ask, it's a common question, why do we have 2 columns here? 2 pounds signs, 2 columns. Again, this is not debit, this is not credit. Only this is to make that statement tidy. Yeah, remember this. So sales minus cost of sales. Yes, as you see here, what happened, we put beside cost of sales working one, because I need to go back to working one and mark it. Yeah, so remember that workings are marked, so remember this. So you need to make them tidy. Okay, so 47,000, which is cost of sales, which we've done it. Great. So 79,000 minus cost of sales, 47,000 equal 32,000 pound gross profit. Great. So now what you need to do, you need to minus the expenses, which is we have again, we did it in working two, and it is 26,000 pound. If you go back to working two, you will see it. £32,000 minus £26,000, so this is £6,000. £6,000. £6,000 is what is the operating profit. Is what is the operating profit. So again, there is no in the question other income or such as interest received, discount received, or interest payable or tax payable. In this case, this is operating profit, 6,000, and this is end of the question. So remember this 6,000, remember that we needed in order to prepare a statement of financial position in the next exam.